Hi everyone. I think we should get started now. Yeah, 5 minutes, give people a chance to come in. But yeah, thank you all for attending. I'm not sure if you've been on these webinars before. This is actually my first one, so I'm sure you'll see plenty more of me in the future. And I'm glad that we've got the likes of Faye Adams on the call today on the webinar to go through any mortgage or finance expertise and help you guys with any sort of finance kind of concerns, issues, questions, and then hopefully that will help you make a great investment decision in the future. So just going to go through the slides now. So a little bit about myself, Joseph Mews, our process, who we partner with, and the developers that we work with. So, unfortunately, Andrew couldn't attend today, but we do have, as you can see, myself and Faye, both going to split the webinar today, touching on different topics. Again, depending on the slides. So, yeah, next slide, please. So, a little bit about us. As you can see, the gent on the top right is Andy Foote, our chairman, director. He, bit of a funny story actually. He had invested in property himself abroad, I believe Spain. Had a few issues in terms of the process, the communication, the quality of the service, and I think that kind of sparked something in Andy to create a business where we can overcome those challenges, and you as the investors have the best experience possible from beginning to end. And I'll touch on that on the next few slides where we've got a process at the beginning right through to obviously the property launch through to when you complete, and even after that the aftercare, etc. So yeah, we've done really well, and it's good to have Andy backing us with his experience. So yeah, next slide please. So as you can see, some great figures on the screen. Starting at the top left, we've yeah, units marketed, sold, and most importantly delivered is a very strong number there, and I think that's testament to, as I mentioned previously, the service from beginning to end, and really going along that journey with our customers to make the right investment decision. And moving nicely on to the bottom figures, so 28% of our clients are repeat purchasers. Again, testament to our thorough process, again, beginning to end. 43 developments marketed and sold, and the GDV, so gross development value, is again is excellent. So yeah, next slide, please. So this is just a little bit about our partnerships and developers. There's some very familiar names that you might have seen, so the likes of Knight Frank, JLL, and Elevate Property Group, if you're familiar with developments in Birmingham, and again others across the UK. We like to see ourselves as a property promoter, but we really do partner and joint venture with, for example, the likes of Elevate Property Group, who are a multi-award-winning developer, not only in Birmingham but across the UK. And it's obviously a pleasure to develop that relationship. And the way that we look at it is that the best product that we supply to you guys as the investors, the best of the long run. And obviously, the end goal is to make sure that you gain wealth through property, and we continue to work with great developers and great products, and have that good cycle of providing excellency to the market where property is concerned. Again, a few other good names in there. Second Group, we've got an excellent development up north, and HBD Consortia, again, some good names up there. So yeah, next slide, please. So as I mentioned earlier on in the webinar and the slides, this is simply put how we go through it. So the reservation from the start, we pick an excellent product for you. That could be one, two, three bed studios, etc. It could be a multi product deal essentially. And what we do is, from the reservation point, we go through the exchange process. We initiate the solicitors. We've got an excellent panel of solicitors that we use and we trust. But again, also there's options there if you've been taken care of previously. Once the exchange process happens, we go through to the customer care. So there's normally a window of kind of maybe 12 to 18 months period through that kind of off-plan period, so that the property's been built or the units are being developed. and yeah, through that exchange, we keep in touch. We give you build updates through the process. So we normally get, for example, we've got a development in Birmingham. We get around about a monthly, 2 month kind of period where we get updates on where the build's at. It could be specifics on we've got the partition walls in, we've got the windows in, and we really see that journey. And we see things come together, and that it's really painting a picture of your investment and what the end goal is going to be. And seeing that journey is also excellent. Not only that, we've obviously got the handover. So when the property's complete and you pay or mortgage, in this case, the rest of the outstanding balance, completion after sales, we think it's really important to not only sell the property at the front end, but the back end is just as important, as in it's an investment and it's essentially obviously it's your money going into the investment. Um, we make sure that the customer care, the snagging, we go through all that stuff. And looking at this, as you can see from the slides, this process, there's so many more details between these layers, but it's all about making sure that it's more kind of hands off for you guys because you'll be busy, other investments. Some of you might be working alongside being an investor. So yeah, very much hands off. We'll take care of it and we'll go from there. So yeah, next slide, please. So just a kind of highlight, we do have a Q&A box if you do want to write some questions in there now and throughout the rest of the slides, me and Faye collectively will answer those at the end just to kind of keep the structure of the webinar. Yeah, so next slide, please. So obviously as an investor, there's multi-factors of what you'll be focusing on, but what we see is obviously the rental yields, so strong rental yields, and we pick developers and developments and locations that give you that. This graph is more centered towards the capital appreciation. The UK market is, as you can see, it's always been strong. We've got that steady curve leading into obviously from 1977 right through to now, 2024, 2025. It has been an excellent curve going up, and I think it's the house prices double every 13 years. The only thing I think we've seen in property, and I think this is testament to how strong property is as an investment, it really holds its value, and the patterns you can see. Obviously, with 2008, which we all know, things took a little bit of a dip, but it didn't last long, essentially. So, in turn, when's the perfect point to enter the market or enter an investment? It's pretty much now because we know that looking at the research and looking at what we've seen the last how many years, all leads to property will always creep up in price. And as I said, every 13 years doubles in price. So perfect for investors. That's why the UK market's so good. We have an excellent presence, well, huge presence of overseas investors, and obviously there's a record there of the UK having the biggest kind of offshore investor network or investor population. So, yeah, next slide, please. So again, all of this information here, I won't read anything from the slides, but in a nutshell, this slide is very much centered towards supply and demand dynamics. So simply in the UK, we don't have enough property and we have high demand constantly. We have obviously people coming to the UK to live. We have people coming to the UK to invest. We have demand obviously out offshore, overseas that want to invest into UK property. And again, demand and supply and demand dynamics again points towards people needing somewhere to live, and perfect for investors. I don't think we're ever going to catch up. I think it's going to anything for kind of 50 years plus for that to catch up and the supply and demand to level off. So any investments now moving forward, there's always going to be a strong supply and demand dynamic for investors such as yourselves. Yeah, next slide, please. So this is where Faye comes in. So we're very lucky to have Faye. Been working with Faye for many, many years. She's a trusted mortgage specialist. for both UK and overseas. So I'll hand over to Faye and she'll go through some of the slides and give you all the knowledge you need to make a good investment.
Lovely. Thank you, Luke. Hi, everyone. Good evening, and thanks for joining the webinar. So I'll be covering the mortgage market and how it's looking for all you lovely investors looking to expand your portfolio or get, first hand in your UK property purchase. So I'll start by giving you a little bit of an introduction on Peritus International, a little bit about myself. So whole of market brokerage firm, which means you can't be beaten. Got on the panel with all the lenders. So there are around 80 lenders in the UK that you can access. We're also regulated by the Financial Conduct Authority. If you're overseas, you're protected as if you're on UK soil against our advice as well, because we are regulated. So my background is I specialise in clients residing or temporarily overseas looking to invest here in the UK, whether it be for personal usage or investment. But to get there, I had to specialise in buy-to-let for UK residents first. So whether you're looking to buy in a limited company or in a personal name, I can help. I also specialise in Sharia financing. So if you follow Sharia law and are of Muslim faith, you'd be happy to know I can help you with Sharia financing as well. So I've worked with many developers and properties all around the UK. So I've mortgaged the weird and wonderful and worked with some great developers. Elevate being one of them that Luke just mentioned, fantastic developer. So I understand the difficulties that you fear you may face, but I am here to help guide you and show you that it is possible whilst getting you the best mortgage for your circumstances. The best part of it is I'm fully independent, so I don't work for anyone, but I work for you. We give you expert, impartial, and professional advice to make sure that you reach your objectives and goals. Okay, next slide, please. So this is a poll. So what do you think is the biggest challenge in getting a mortgage as a UK property investor? So the answers could be high interest rates, strict lending criteria, deposit requirements, or limited mortgage options for buy-to-let. It'd be interesting to see the results on this one. Lovely. So, okay, a bit of a mixed bag. So, high interest rates. Obviously, we did see high interest rates. You may all have seen in the news the Bank of England base rates falling. Rates have started to reduce. We did see a bit of market manipulation where that they are much lower than they needed to be, and the fees were higher. But we are starting to bottom out now, so that's a lot better. Strict lending criteria. It depends on the lender. So some lenders are strict because they've got a certain market that they want to access. Others, they like first-time buyers, first-time landlords, people who've just, never owned a property and are going into investments, limited companies. Although some lenders are strict, there's some that just want all the business and will take what they can. So it's very, very rare that I can't help anybody with a mortgage unless you've got very severe adverse credit. And by that, I mean you're in mortgage arrears or very recent, debt arrangements. Deposit requirements. So for investments, 25% is what we say as a guide. There are some lenders that will do 80% mortgages, so we need a 20% deposit, but then the rates are a lot higher. The risk is higher. So we do say 25% deposit for an investment. And then limited mortgage options for buy-to-let. There are so many options. It's unbelievable. There'll be banks and building societies that you've never heard of, but they absolutely love the buy-to-let market. And like Luke said, for offshore investors as well, they know that the properties are doubling. Like Luke said, every 13 years. Mine's doubled in 10 years. So people get wind of that, and there's all these lenders that want a piece of all this market. So there's many, many lenders, all new lenders and new criteria coming out all the time. So thank you for that. Okay, next slide, please. Okay, so how to invest in UK property with a mortgage. So how much mortgage can I get for my UK property purchase? So when you're doing a investment, it actually is based on the rental income. So the rental income of that property, the expected rental income, is what it allows you to borrow X amount. So it's actually on the rental income. Now, although the lender will assess you and have a look at your income as well, potentially some lenders, they'll want to make sure that you can afford the mortgage if there was no tenant in the property. Others, they don't even look at income. Some of them don't have minimum income requirements. They just like to see some sort of income, and they just assess it on the rental income. So you've got somebody on £30,000 a year. If it's a buy to let, they could actually have something like a £700,000 mortgage as long as the rent fits. So yeah, it's crazy, but it's good. How do I become mortgage ready? Speak with your broker. So speak with the broker. We can have a look at your circumstances, set your expectations. You can be onboarded. We can get you documents and a decision in principle with a lender to give you comfort if needed. We try and say clear as much of your debts off as possible other than mortgages, just because although it does go on the rental income, like I said, there is a debt to income ratio with some lenders. So if your debts are more than 50% of your income or 40% of your income, it can look a bit high risk. So it's always good to pay down your debts as well if you can. And number three, what costs are involved with buying through a mortgage? So it depends if you're doing limited company or personal. Obviously, if you haven't got your limited company, you'll need to get that set up. It's not too expensive, it's a couple of £100, and you'll need a bank account for your limited company. With having a mortgage with any lender, they'll have fees. So these can be called arrangement fees, product fee, application fee. It's all a fee. Most of these can be added to the mortgage. So even if you're borrowing the maximum, 75% loan to value, they can be added on top. So what that means is you'll pay mortgage interest on them, but it's not an outgoing. The outgoings, your typical C or a broker fee, a valuation fee. So these are all independent people. So your broker will be independent, such as myself, and I will do the mortgage for you and my advice and source it. Your valuer, so the lender will instruct an independent valuer to go out to the property, to assess the property, to get that estimated rental income and also the value so they can release an offer. Your solicitor's fees, again, they're independent, so you'll pay your solicitor's fees. So how many options do I have? It depends on your circumstances. If you are a first-time buyer, first-time landlord, and owned nothing in the UK, you're going to have less options than somebody who's got two properties and they've been running it for a couple of years and they've had experience and they can see on a credit history that they've kept up with mortgage payments, that they're a good landlord. So it does depend on your circumstances. The lower the risk, the more lenders you've got. But there's obviously lenders for everybody. So it depends on your circumstances. And this is why we'd say always speak with your broker first. So number five, what are the factors affecting mortgage eligibility and interest rates? A bit like what I've just said, really, just touching on that. It depends on if you're a first-time buyer, first-time landlord in a limited company, what's your income if you've got experience. Also your loan to value. Some lenders, you put a bigger deposit in, you get lower interest rates. So it depends on those factors. And number six, speaking to a mortgage broker to help find the best mortgage. Absolutely. Like I said, we've got over 80 lenders. There are lenders you've probably never even heard of. We've got them. We've got access to them. We know what they like. We know what they don't like, and we can fit you with the best lender. You may think, oh, okay, HSBC, let's go to my bank. They've got great interest rates. They don't like certain properties. They don't do limited companies, for example. So we'll make sure that we find you the most cost-effective solution for your purchase. Okay, next slide, please. So what are the costs beyond the UK property purchase price? I did just touch on these, but I'll go through them again. Deposit, 25% for an investment. If you're looking to buy the property to live or a second home or for your child, we can do a 10% deposit. If it is a second home, some lenders do like a bigger deposit, like 20%. Your stamp duty, that is tax. Boo, we don't like tax. So tax is paid, the stamp duty is paid only once when you purchase the property to your solicitor. So it's paying tax on the land of the property. Your conveyancing fees, as I mentioned, for your solicitor. Your lender fee, that's that lender fee, arrangement fee, project fee that can be added to the mortgage or it can be paid up front. broker fees, as I mentioned, your letting agent fee. So after it's all complete, your letting agent will manage the property, find your tenant. So if anything needs doing in the property, they'll manage that for you. So you'll have your letting agent fee if you want one. Landlord insurance, not an essential, you don't have to have landlord insurance, but obviously it is recommended. So that you can have rental insurance. So if the tenant didn't pay, the insurance will pay out. Also contents insurance. If it's an apartment and upstairs leave the tap on and it leaks through, it covers your belongings and your property. Property maintenance. So those costs, if you have a letting agent, you'll pay them directly for the property maintenance. If anything needs doing. But obviously with Joseph Mews, you get a 10-year warranty on most of the builds as well. So the building is insured. And then you tax on your rent received if you're doing an investment. Now that depends if you're doing it in a limited company, doing it a personal name, if you're a higher rate taxpayer, basic rate taxpayer. But again, speak with your broker if you're worried about that, and we can guide you. Okay, next slide, please. So the key factors. So credit profile. So if you are doing an investment, it is great to have a credit profile, great to have a high credit score. Now, some lenders will do a credit search and not a credit score. So some people will have low scores because they've not taken out any credit card. They've never needed to. They might not be on the electoral roll. So their credit score is low, but they've never missed a payment. Or been late with a payment. So it depends on the lender. Some will credit score and some will credit search. Some don't even bother about the credit file if you're overseas. They understand that you've never been to the UK, maybe you've never stepped foot in the UK, you don't have a credit profile. So there's some lenders that will do that as well. Income profile. So with your buy to lets, some lenders, although they use the rental income to define how much you can borrow, they do have minimum income requirements. There might be £20,000 a year, 30,000. There's some that are premium and they're like high net worth clients that may have a minimum income of 75,000. So again, speaking with us, we'll take your details and find out which lender you fit with best. Your client experience, like I said, if you have got a property already, you've got a background and you've managed a property before, there's going to be other lenders available to you. To get your foot in the door, there are lenders. You're not going to be penalised, but once you've owned a property for 12 months, you've got that experience, you've got that mortgage history, you're going to open up a world of other lenders. So it only gets better the more you grow your portfolio. So your payment structure, I'll touch on this in a minute. You may have heard of interest only and capital repayment. So I'll touch on that in a moment on another slide. The property type, like I mentioned, HSBC, they don't like new build apartments. They don't need them. They've got a big back book of people who bank with them and they have, terraced houses and they're happy with them. But with new build apartments, they may not, have an appetite for them. Some lenders crazily have a floor limit. So if it's, they won't lend on anything that's above 10 floors. Why, we don't know, but no lender can lend on everything. Otherwise, there'd only be one lender and we'd go to them for the cheapest. So there's all these different factors. And then the rental income, as I touched base at before, the rent defines how much you can borrow. So we'd always look at the rental income and what the valuer says as well. Okay, next slide, please. And on the repayment methods. So you've got two options, interest only and capital repayment. Capital repayment is your monthly payments will be higher. So let's say an example, we're borrowing £100,000 over 25 years. After 25 years, you will owe zero. You have paid that mortgage off, but your monthly payments are higher because what you're doing is paying the interest and you're paying a little bit off what you borrowed to have nothing left after the 25 years. The other option, interest only. You're not paying that balance down. So at the end of 25 years, you'd still have £100,000 left. You say, well, how do I pay that? How do I give it back? What happens after 25 years? You can pay it off however you wish. You could have maybe pension, endowments, investments, or you can sell the property. So let's say you bought the property for 150,000, and then in 30 years time, 25 years time, the property might be worth 400,000. You sell it for 400,000, you give them the £100,000 back with no interest because you've paid for the interest as you've kept the loan, and then you walk away with your profit. Very, very popular for investors. What you can do as well, what's also popular is you have the interest only because it keeps your monthly payments low. So if there is no tenant, your payments low because you do need to keep up with your repayments on a mortgage. But if you have a bonus or you've got spare funds at the end of the year from the rental income, some lenders have an overpayment facility. So what it means is you can bring down the capital at your own pace. Just like myself, I have an interest-only mortgage. I pay £500 extra per month. That's more than I would have ever paid in a capital repayment. But if I need then that money that month, I can just keep it. I don't need to. So I'm reducing the balance and reducing the amount of interest that I pay. So hopefully that helps on that. But obviously we've got your Q&A if you need any questions. Okay, next slide, please. So what do you need for a mortgage? What documents do I need? Some lenders are different again. There's no kind of just script for them all, but typically you need to verify who you are. So I'm Faye Adams. How I verify that is give them a copy of my passport, my driving license. Proof of address, it needs to be dated within 3 months. So it's evident that you currently live in there and you've had some correspondence to there. And the property information. So would need to know the address of the property because we're going to send a valuer out and also details about the property so that I can find that suitable lender for you. Deposit requirements. So as I mentioned, a minimum of 25% of the property value is a deposit. Higher deposits are often required for non-residents and impact on the exchange rate. Actually, there are a lot of lenders now for overseas that are doing match 25% and some still going up to 80%. So they're mirroring the UK market now. Your financial strength. So if you do have a credit report and income statements, last 3 months pay slips, if you're self-employed, it'd be 2 years worth of self-assessments or corporation tax if you're in a limited company. There are some lenders that will do 1 year's. Again, they've got an appetite for it, but we'll find a suitable lender depending on what your circumstances are. You need a UK bank account. So if you're overseas, you must have a UK bank account. Again, I can help with that and guide where you need to go. Sometimes it's harder to open a bank account than it is to get a mortgage. So this is where I'm here and I will help. And your legal and regulatory compliance. So you need to understand the UK property taxes, including what your stamp duty is going to be. You can seek legal advice on property laws and tax implications if you're a non-resident. But again, I will help you if you have any questions. Okay, next slide, please. Okay, so this is just an example of the home buying journey. So this is more if you're buying it for a residential, but it's very similar for a buy-to-let. So what you do is you need to speak with us and see how much you can borrow. Most of the market now, we are getting up to the 75% loan to value. It's very rare. But actually, you can borrow less on a 2-year fixed than you can a 5-year. But we are seeing the market settling. We are getting 75% loan to value on the 2-year fixed now as well. But speak with us. Let's see what the products are, what you want, and how much you can borrow so you know what deposit you need. So we then take details of your income and expenses. That again is for more residential. Residential goes on your income. Buy-to-let goes on the rental income. But once we've had that discussion, we'll find the right mortgage for you. You can make the offer on the property or reserve the property. We'll give you advice and guidance on the right mortgage. If the rates come down during the process as well, we can switch them for you. We do not charge. It's a one-off flat fee. And what we'll do is we will switch that to the lower rate every time we get notified that the rates are changing. Lenders change the rates all the time, but we get notified. We get an email on which lender is changing. So we'll notify you and swap it. So you're not losing out or you're scared to lock in anything. We can change it. So we'll do your application for your preferred product, as I mentioned. Once you've been assessed, so your documents have been assessed, the property has been assessed, then the offer is released. Then that is my job done, but the offer goes to your solicitor. So your solicitor will liaise and do all the legal work for you, and then you will exchange and complete. If you are doing off plan, or you will exchange prior, so it will just move to your completion and then you get the keys to your property. Lovely. Next slide, please. And that's me done. Back over to Luke.
Thank you, Faye. That was great. Thank you very much for joining. Any questions for Faye? Again, if you can drop them in the Q&A box, or we can make an introduction to Faye post this webinar. So, as I mentioned earlier, we as a promoter and partner for developers, we always pick areas where it benefits you as the investor most. So again, touching back on capital appreciation and strong rental yields. So starting off with this slide, we've got Birmingham City Centre been top of the tree of great cities and best location to invest in the UK. It is the second city next to London, but we are seeing Birmingham outperform not only London but against the average across the UK. Birmingham is again top of the tree. Next slide, please. And just touching on that, so we have various developments in Birmingham, which we're proud to say. The best location, and again, top of that tree is number 30 St Paul's, which you may or may not have seen. But again, we can touch on this post the webinar if you are interested in a product like this. Next slide, please. So again, most of our properties are off plan. Um, why? Again, once you enter the market and you pick a unit and you have something in place, whilst the property's been built, we do see that increase of capital depreciation. And in that middle bit, we obviously go through that customer journey and take care of that property for you, not only when it's complete, but in the middle. This is centered in St Paul's Square, so again, a best location in Birmingham in the Jewellery Quarter. This is it's the Mayfair of Birmingham. We've got, as you can see on the slide there, we've got the left-hand side of the development is that old Georgian. It's got history to it. In the middle, we've got an art gallery and offices, and then on the right-hand side, we have the modern part of the development, and it wraps around the centre, which I'll go through in a minute. Price is at 249,950 for one beds. Again, competitive price there, and again, really good location. 20% deposit for investors, as Faye mentioned, you'd have that 25%. Again, holding its own, strong rental yields in Birmingham, which is outperforming the UK average. And completion for this development and project is Q1 2026. So yeah, perfect time to invest and buy now. Can I have the next slide, please? As I mentioned very quickly, the Mayfair Birmingham is the best location to live in Birmingham currently. Quoted in the Sunday Times, Jewellery Quarter has been the best, not just the UK, but in the world, which is excellent to see, being from Birmingham myself. Next slide, please. So this is just a little bit about the kind of Birmingham area. It's actually not too big really, Birmingham, but it's and that's part of the benefit is that everything is in close contention to each other. So as you can see, we've got 30 St Paul's just at the kind of top left, and obviously if you can't see it, we'll send the slides afterwards just so you can see this in a bit more detail. But big companies like Goldman Sachs, KPMG, HSBC, PwC. We've also got train stations on there that are very close and within walking distance. And overall, great locations. We've got the Gun Quarter top middle, Digbeth, and as you can see, the Ladywood and the west side of Birmingham. But we have picked this development again. All those benefits have been close to where you'll see the high quality tenants working for the likes of KPMG and PwC. And touching on those companies, what we're seeing is, and go back to London, we're seeing a lot of people either commuting from Birmingham to London because we're going to have HS2, another benefit on top of the train stations we already have. That's going to bring more supply and demand. It's going to have a positive impact on supply and demand. And we also have, it's worth mentioning, loads of universities, five altogether in total, and I think it's just under 50% of graduate retention. Again, adds to that positive impact to supply and demand. Not enough property, and good for you guys, too many potential tenants and high quality tenants. Next slide, please. So again, just some good features of 30 St Paul's. It is an excellent development. I've been there countless times now to be on site. So worth mentioning, if you are looking to purchase an asset and an investment like this, I can meet you on site to show you around. We can meet the developer personally. We have an office on St. Paul Square. The developer's on St. Paul Square, and the development itself is on St. Paul Square. So we can go and see the site and really show you what it's like. It's even better in person. Next slide, please. So as I mentioned, the development actually wraps around this tranquil garden, as you can see on the CGI. Um, Been there so many times myself. It's a very quiet, so perfect for tenants or homeowners that want to have that peaceful, but also have the city in touching distance. A lot of people are working from home now, so we are seeing people wanting to be in a quiet location, but still quite close to the workplace as well, just in case they are doing a sort of hybrid working with their workplace. It is very, very nice and tranquil in that garden, I must say, and again, happy to show anyone around if they are interested in something like this. Next slide, please. So yeah, a little bit. This is the developer Elevate Property Group. Um, well known for their kind of modern take on the world of finish, and if you look at the decor, very Art Deco, lends itself nicely to the market. Um, Again, another benefit to your tenants, much more attractive to want to live somewhere like this or rent somewhere. So yeah, next slide, please. Again, excellent finish. Different take on the style, a little bit more of an airy space with the nice dark features, and we're seeing this a lot of current developments really adopting this style. So Elevate are really leading from the front. Next slide, please. Yeah, lovely view from the church. So the development actually sits on the top of that hill to the right hand side of this church, and it is a an excellent view from the development. There's properties on the front that can see this, so lovely to see all year round. Next slide, please. Again, St. Paul Square. It's an excellent place not only to live. There's restaurants, bars. There's a really nice, classy feel to the vibe in that area. I've grew up in Birmingham and been here many times, and essentially never gets old. But yeah, an excellent area to have an asset and to live, and perfect for tenants to have a great experience of your property. Next slide, please. So again, I've touched on them earlier on, and just Elevate Property Group, they are an award-winning developer. As I mentioned earlier, we do work with award-winning developers. The product's better. For you as an investor, it's a great asset to have. So we need to make sure that the property is worth the money and it's going to hold its value. Something again, the aim is to reap the benefit of gaining wealth through property. Next slide, please. She's our chairman, and this is the CEO of Elevate Property Group. We did a really nice launch earlier on this year, and we've done well on this development and still have some excellent units to view and to purchase. Next slide, please. These are just a few of the other developments. So Loom House, as you can see in the top left, is by Elevate Property Group. There's a few on here that are very, very different in terms of the location, the product itself, the amenities, all lends itself, and again goes back to our model of giving the investor market and the homeowner market an excellent choice in products and what they can purchase and keep and hold on to. So again, prices are very different in terms of area. Some of our clients look at multiple purchases, so might have one in Derby, might have one in Birmingham, might have one in Leeds, because they all are good for different things, but all worth the investment. Next slide, please. So obviously you guys are kind of keep these webinars going, and we're looking to be able to do this regularly and speak and engage and support you on your investment journey. So to kind of give back, we want to help you and put some money towards legal fees, etc., etc. So that's definitely something to consider if you are looking at a property product at the moment. And yeah, we're happy to share that with you. Next slide, please. Next. So yeah, there's a few questions on here that if you want to fill out what is best suited to you, we can obviously introduce you to Faye on the mortgage and finance side, give you all the options, go into more detail of what Faye has spoken about today. Of course, if you're ready to invest, we have the products, and if you like the look of our developments, please do contact, and we'll be in touch after the webinar anyway with the slides, so you can go back and have a look and to talk about a product that you might be interested in. And I'll again introduce you to Faye if you need it. Next slide, please. I would need to fill out, apologies. If you want to fill out this next steps and these options, please do go ahead and do that. We'll just wait for the answers to come in. I think we do have a question in the box as well, Fam. I'm not sure if you can see that, but we can go through that. You just on mute, Faye, sorry.
Apologies.
Easily done.
Yeah. So yeah, we had one from Eve. It was a good question I didn't touch on, so apologies. So she said, what's the difference buying in a name of a company or individual? So it seems limited
Brilliant.
company pay less money. Is the process this easy? It really is. Yeah. So I see things online that you can't buy a property in a limited company. You need 2 years trading history first in that company. How can you get 2 years trading history in a company without a property company without buying a property? So no, you can just set up the company. You don't have to have 3 months bank statements. You just provide a proof of account opening letter, and you buy. So I've got clients that do like to buy some properties in different companies. So they've got 5 different companies with a property each in it. Some people, I've got 80 properties in one limited company. But yes, you can literally just set it up and go. Now, the difference is mainly tax. So limited company is a tax wrapper, especially if you're going to be a higher rate taxpayer at any point with that rental income coming in, it's good to do it as a limited company. I'm not a tax advisor, by the way, but if you earn over the 50,000, just over 50,000, you'll pay 40% on that. In a limited company, you won't. So you can also offset any mortgage interest off your tax in a limited company. You can't in a personal name. So it does have those benefits. It has other benefits as well, keeping it outside of your estate, or if you want to leave it to children later on, you can put the children on shareholders, etc. But it is very good. You say, what's the negatives you think of limited company? There's only one that I can see is your legals are just slightly a little bit more expensive setup, but it will outweigh the cost absolutely because you'll save on tax. Also, I can speak with you how you get your money out of the company as well. So we can go through that, because if you take the money out of the company, you will pay your personal tax, but dividend tax is a lot less cheaper than your personal tax. But again, if you have a conversation with me, I can help you and find the best solution for you.
And I think that's all the questions so far. If you do have anything quickly that you want to ask or add on to what Faye said or what I've said, please drop it in quickly. But just to, I think to just kind of close things off, I think people think that that the mortgage is a blocker, but it's not as complicated as you think. We just need someone like Faye as an expert to really take you through that journey and make things simple. And again, all that leads to is a good investment choice, and making things easier for you and very kind of hands off. Thanks, Eve. Yeah, thanks for asking that question. It was a good question. Good answer. So happy to help. If you are, I think a lot of you may have clicked on kind of next steps and what you want to see from us. Of course, we can make introductions to Faye, as I mentioned earlier. I can talk about the investment options and the products.